Good afternoon, everyone, and welcome to today's ACCA Enrichment session for paper Strategic Business Reporting. And if this is your first time joining the Enrichment session, welcome on board. My name is Joanne, the Manager in Learning Support for ACCA Malaysia. And together with me on the screen is our ACCA expert tutor, Tom Clendon. Yep. And before I hand over to Tom, we are opening up for Q&A session throughout the session. So if you have any questions for Tom, you just type them in the chat box at the bottom right-hand side of the screen below. And then make sure the message is actually sent to everyone. And then Tom will address your questions whenever possible. All right. So we should get started now. I'm sure Tom has a lot to cover with you all today. So I will now pass the floor to Tom. Over to you, Tom. Thank you.
Thank you very much, Joanne. Yeah, excellent. And let me share my screen and run through the beginning of the PowerPoint. So here we go. So welcome, everybody. Thank you for giving up your Sunday afternoon. It is for me, of course, Sunday morning. Now I'm just getting a little bit frustrated with my share. So let me start again. Let's get it right from the first time. And there we go. That's better. That's better, isn't it? That's better for me. That's better for you, I hope. So welcome. As Joanne said, you've got access to the chat box. We'll have a formal sort of Q&A at the end of the session. So we've got a long session here today, and I want to try and cover as much ground as possible. But no doubt there will be some very general questions, some very detailed and specific questions. And if you've got those of a general nature, chuck them in the Q&A. You've got a Q&A session. But if it's something that you're responding to me, something that is on the go, then please use the chat box. So yeah, this is me. This is welcome. So let's talk about the structure of today, what we're actually going to get through this afternoon. I'm going to try and mix it up a little bit because we've got a variety. We've got a long time together. So we're going to take some short breaks. There's going to be a little bit of teaching, and there's going to be some stuff on the practice platform. So I do want to work several questions or parts of several questions on the practice platform for you, practically showing you, demonstrating to you, the right exam technique and giving you the knowledge. So after the introductions, we'll look at a current issue, a very current issue. And then I also want to have a look at ethics. I want to do core areas. I think the current issues is going to be there. I think ethics is something which is always there. And then I've got something slightly different for you. Joanne suggested that we have a prize draw. So there will be a prize draw later on in the session where I'll give you an opportunity of joining me in one of my mock exam opportunities. So there will be a prize draw later on. I also want to have a look at deferred tax. And again, of course, it's going to be using the practice platform. But first of all, out of curiosity, I'm just wondering where you all are. I spent many years living in Southeast Asia, and I've been to Malaysia many times, and I'm just wondering where you are. So if you could use the chat box and just tell me your nearest city, your nearest area. Sabah, okay, Chris, welcome, Chris. Johor, yeah, been there. Sengalore, yeah, been there. Sarawak, never did get to Sarawak, yeah. Okay, lots in KL. Philippines, yeah. Selangor, excellent. Oh well, this is bringing back happy memories. I only wish I could be with you now. Tiffany's from Singapore. Welcome, Tiffany. Thank you for joining us today. Oh, Seoul, yeah. South Korea, yeah, managed to get over to Seoul and do a little bit of teaching there. So welcome, Lee Kwang. Welcome indeed. Right, so good. I know that you can hear me and that you can use the chat. So in terms of introductions, the first thing I'd like to do is introduce a little bit more about myself. I am ACCA in the sense that I did these exams. When I was in my 20s, for whatever reason, and I won't go into it now, but I didn't go to university. And I saw ACCA as an opportunity to continue my education in a professional context. And it really worked for me, really was a life-changing thing for me to get qualified as ACCA. And I did so whilst working for KPMG. So obviously it was before the internet and before so many things, many years ago. But I did these exams. So I know what it's like to juggle, to work at the weekends. But I realized very quickly after I qualified that the world of the Big Four and practice wasn't for me personally, and that my vocation was teaching. So I got into working for Emil Wolf, which then became FTC, which then became Kaplan. And I rose to be the director, and I ran the office in London dealing with the ACCA. And so I had a lot of dealings with ACCA at the time, and I had a lot of opportunities to teach overseas. But eventually I decided to leave Kaplan, and I went to work in Malaysia, in Singapore, in Southeast Asia for a number of years, where I had a great time teaching ACCA across the region. But all good things come to an end, and I came back to the UK, and I'm now an online lecturer. So what I do is I teach online ACCA, SBR, and I use the medium. I use a company called FME Online to help me do that. Now, I have quite a high, or I'd like to think I have, quite a high visible presence on LinkedIn. So if you're not familiar with, if you're on LinkedIn, which is the social media practice for professionals, I would encourage you to get on it if you're not on it. And if you are on it, I'd encourage you to connect with me. I'm very easy to find. The name's Clendon, and then there's a lot of resources there and posts there, all relevant to helping you pass your exams. I also do podcasts, and I'll come back to that a little bit later. But really, one of the things that you should be doing between now and the next couple of weeks in the exam is listening to podcasts. That's going to give you a fresh way of learning other than just studying. Yeah. So look, this is me. I'm also interested in thinking about who you are, and therefore, for that reason, I've got a question to ask you, or a couple of questions to ask you, because I'm sitting here in London. I'm on my computer. I will share my LinkedIn name here. My LinkedIn name is simply that, Tom Clendon. Yeah, and you will find, that is my LinkedIn name. Yeah, thank you, Messalina. Yeah, thank you. So what you should see on your screen now is a poll, and this poll, it's not that it. Oh, now you can't see that poll, can you? You can't see that poll. So I wonder what happened there. We're just making sure that maybe these polls need to be reset. We were just checking them earlier. And that poll can't be seen, can it, Ryan?
Oh, yeah, just maybe I'll try to launch the first question on my side for you.
Yeah, thank you.
Okay.
So just a little bit of technical stuff going on in the background.
All right.
No, we don't know. No, that's that. Look, the power of technology. Thank you, Ryan. So look,
Most welcome.
The poll doesn't have a right answer and the poll doesn't have a wrong answer, but I'm just curious, you know, as to how you are watching this webinar. All right. I think most of you will be watching it on a laptop or a computer, and probably that way, and with the iPad, you've got the full functionality. Some of you will be on a phone, no doubt. I think in an ideal world, though, probably a phone is not the best way. May not have all the functionality, and you may also be more prone to be distracted. So yeah, let's end that poll. So thank you very much, those of you who answered that poll. And you can see 3/4 of you, 75% of you, are in fact watching it on a laptop. And I think that's probably the right way to go. So well done. Obviously, iPads work equally well. Now, a little bit more personal about you and about SBR. Again, I'm curious to know what your relationship with SBR is, whether you're a virgin, or whether you're coming back another time to have a go. And so one option is that December is your first attempt. Another option is that you've already passed another strategic professional, and another option is you're recent. I know, so these could be overlapping. So it's a little bit about what you feel, yeah, where you're coming from. I have this theory that a lot of students come to SBR for their first strategic professional paper, and that's a normal thing. That's a normal thing. Let me give you 4 more seconds. I think most people have voted who are going to vote. So December will be my first attempt. So you can see that 61% of you are coming to SBR, yeah, maybe from skills, maybe from exemptions, and it's your first attempt at any strategic paper. Ladies and gentlemen, it's tough. There's going to be a step up here. All right, you don't want to have any regrets in your approach to your studies, because you know, those of you who've already passed, the 17% of you who've already passed another strategic professional paper, if you like, you now know what it takes to pass. You now know what it takes to pass a strategic professional exam. And so you're battle hardened and slightly, you're slightly better, if you like, mentally prepared, because you know what it takes. If you're resitting SBR, not a problem. Yeah, not a problem. You're now better prepared, having gone through that experience once, to tackle it again. You've got a platform on which you've got to build. What I would say to you is, if you're resitting SBR, what are you going to do differently? What is it that you're going to do differently this time compared to last time that's going to make that difference, that's going to get you over the edge? And I suspect I know the answer, which is probably tied up with mock exams, probably tied up with more question practice. Now, not in this context per se, but I listen to a lot of students. I talk to a lot of students. And those students whom I'm counseling and supporting, who have previously failed an exam, when they reflect, it's often that they spent too much time learning, too much time absorbing, and not enough time practicing questions. So yeah, think about what it takes to get through. Now, talking of mocks, because I do like talking about mocks, again, I'm curious as to what your relationship is with the mock exam. Yeah, with mock exams. And there's 3 choices, and these are anonymous. These are anonymous. It's just a bit of fun, just a bit of curiosity at the beginning of the session. I'm liking the responses I'm getting here. There are 3 answers, and I do appreciate your honesty. There are 3 answers, and I do appreciate your honesty. But I'm pleased that the overwhelming majority of you who voted so far embrace mock exams, love mock exams, accept mock exams as being part of their, as being part of their revision plan. That's what it's about. If you're going to get through the exam, you've got to have a rehearsal. Yeah, if you go to the theatre, there will have been a dress rehearsal before you get to see the show. If you're a Premiership football team, you play pre-season friendlies so that you can then perform at your best when it really matters. And if you're an ACCA student, you should be doing mock exams so that on the day, your performance is optimum, so that you make mistakes in your mock exam. You learn from your mock exam. Now, what ideally should happen with a mock exam is it doesn't knock your confidence. And maybe it might be knocking your confidence if what you're doing is marking it yourself, if what you're doing is comparing yourself to the examiner's answer. That's not always useful, because the examiner's answer is not what you can produce, and what is a pass. The examiner's answer is like up here, isn't it? And there's no failing a mock exam. You, by definition, you can't fail a mock exam. It's like I don't get the language. It's how much can you learn from the mock exam? You know, what benefits of the mock exam? It's not like we've lost it because there are no. It's a mock. It's a mock. It's a practice. Yeah? It's something that you play with. Yeah, perhaps we should rename mock exams friendlies. Friendly exams. Yeah, so it's like a pre-season friendly. That's what the football teams call their warm-up games, isn't it? Pre-season friendlies. So perhaps we should call our mock exams pre-season mock exams. Yeah, pre-season mocks. Right, okay, thank you. Right, thank you. I promised that I would talk to you about current issues. All right, I promised that I would talk to you about current issues. And that's exactly what I'm going to do now. I had the privilege of having a meeting with the examining team earlier this year. And it wasn't just a one-to-one, and it certainly wasn't face-to-face either, let me tell you that. But at that meeting, at that briefing, I heard a message that was loud and clear, which was sustainability reporting is not going away. The sustainability reporting is part of the SBR syllabus, it's part of current issues, and it's going to be tested again and again and again. And let me share with you that as a result of COP26, one of the exciting developments that's occurred in the accounting environment is that the International Accounting Standards Board has set up a new body. This month, we have seen the launch of the International Sustainability Standards Board. Now, okay, you could say to me, well, Tom, that can't be in the exam because it's only just happened. So it can't possibly be in the exam. I know that. But if you want to come back and do SBR in 2 years' time, we'll be studying new standards on sustainability reporting that have been issued by the International Sustainability Standards Board. And what it tells me is that the community, the accounting community, the investor community, the regulatory community has got its act together and appreciate the need for regulation. We need regulation. We're going to have regulation. That's where we're heading. Now, I've told you that I am an independent freelance, an independent lecturer teaching SBR online through my website, through LinkedIn, whatever. And so I examined my own carbon footprint. And I've managed to find myself audited and certified as being carbon neutral by offsetting my own carbon footprint. Now, my own carbon footprint as a business is fairly small because my students don't travel to college. I don't hand out books, and I don't heat a separate premises. So different business models have different consumptions and attitudes towards their sustainability. Now, I think we know the answer to this question, yes. We have established the International Standards Sustainability Board to make sure that sustainability reports are regulated. So I know the conclusion, but the conclusion is not where the marks are. You're always going to get marks for the debate. And I would argue, it is argued, that there are some advantages of not having regulation. Because it means that if you're doing a sustainability report, you really believe it. If you're doing a sustainability report, you've got the creativity to express yourself, and you're not burdened by red tape. You can be innovative. You can make the sustainability report exactly about you. And if you believe in the market, then effectively what we're saying is that the law of the jungle means the fittest survive, the strongest survive. So if all these different companies are producing a sustainability report, the one that has the best structure, the one that has the best format, that ends up being copied. That ends up becoming best practice. So there's a diversity and a competitiveness if you don't have regulation. The risk of regulation is it becomes sterile and standard. So there are advantages to no regulation. The disadvantages to the absence of regulation is lack of consistency, lack of comparability, the fact that many companies don't do it, so there's a vacuum. It is the status quo. And the whole idea of COP26, the whole idea of sustainability reporting, is we need to move the agenda forward. We need to get more companies involved. Yeah. And so the debate is, the persuasive debate is, it's good to have regulation in this area, because only by having regulation will companies actually do it. So there will be compliance. And if there's compliance from a user perspective, from an investor perspective, then there's an opportunity for comparability. So you've got this benefit of everybody doing it, and everybody doing it in the set way. Now that way's not been decided. That those standard has that you know, we haven't yet had the information coming out. Now there is a disadvantage to regulation, because I want to be even-handed. I want to be impartial here. I want to see both sides of the debate. If you're made to do something, you sometimes drag your heels, you tick the box, you go through the motions, and you see it as red tape. You see it as a cost and a burden, so you don't give your heart and soul. Time out for 1 minute. There is no regulation for you to be tested on. You are not going to have to prepare a sustainability report. But it's a current issue whether or not sustainability reports should be regulated. And I have crudely done a kind of quadrant debate here, advantages, disadvantages, yeah, around it. Real companies do sustainability reports. Yeah. At the moment, they make them up. Right? They're not audited because they're not fully part of the financial statements. Obviously, the auditor has to review them to make sure that they're not inconsistent with other aspects within the financial statement. Okay. Very broad question. What are the challenges with sustainability reporting? What are the challenges? Well, the form and the content. If you're a service industry and you're advising your clients online, your carbon footprint is very small. If you're a manufacturing business, then your carbon footprint might be a lot bigger, and the form and structure and content of your sustainability report might have to be greater. There's always the risk of TMI. TMI stands for too much information. And maybe, just maybe, as a student studying SBR, you feel sometimes there's TMI. Too many standards, too much information. Real life reports, I was looking at the accounts of Tesco's this week. Real life reports are 200 pages long. 200 pages long. And what we're proposing is to add in another 20 pages, 10, 20 pages on sustainability. Now, I think as accountants, we are the perfect people to prepare a sustainability report. What do? We capture transactions, we measure what's going on, and then we report it. Yeah. So as accountants, we're used to capturing, measuring, summarizing, and reporting information. All those financial transactions need to be captured, condensed, organized, summarized, presented, and told to the world. And really, that's what's happening with carbon emissions. That's what's happening with our strategies and our policies. So we are the right people. Accountants are the right people to be doing this. I don't want sustainability reporting to be the responsibility of the legal team or the responsibility of HR or the responsibility of marketing. I want it to be the accountants who are involved. Now, I think there are two things which are bad about sustainability reporting that we want to avoid. And one is boilerplating. Now, boilerplating is not a phrase that is normally on the tip of my tongue, but it is a phrase that I have seen the examiner use in answers, in articles. And what boilerplating means is this: copy, cut, and paste. That somehow we've got a generic, bloated explanation or policy that is then copied and dropped into a report, and it's half a page of gobbledygook. And it's not actually written by the company, for the company, about the company. It's just padding. It's just words. There's no contextualization. Yeah, there's no individualization. What we want out of a sustainability report is an insight into the business, not some generic waffle. Greenwashing. Greenwashing is also a bad thing. And greenwashing is this idea of false expectations. In a sustainability report, no sustainability report is going to say we're bad, we're polluting, and we're just going to carry on forever. All sustainability reports end up saying we're committed to recycling, we're committed to being carbon neutral by 2030, we believe in ethical supply chains, or all of that. Now, if you produce a segmental report which says, look at us, we're wonderful, but the reality is that we carry on our old bad ways, then there's going to be a juxtaposition between the report and the reality. And that's greenwashing. That's producing a report which just sort of glosses over the truth. And you run the risk then, if you do that, of being hypocritical. And it's a ticking time bomb because you're going to get found out. Your customers are going to find out. They're going to leave. Your shareholders are going to find out. They're going to be disillusioned. They're going to sell the shares. You lose your customers, you lose your shareholders. What's left? You mustn't annoy your shareholders or your customers. And hiding the truth and lying to people is not a way to build a relationship. The entity needs its shareholders on board and it needs its customers on board. And that doesn't mean to say that you can't tell them the harsh reality. We're not carbon neutral at the moment, but we are going to be by 2030. Yeah. We recycle 50% of our plastics at the moment, and we're aiming for 80% by the end of the year. Whatever it is, you can not spin, but you can say it as it is, and then say, well, look, these are our targets. This is the direction that we're moving in. Because you don't want to be hypocritical. You don't want to be caught out. There is a challenge. There is a risk with sustainability reports. What do you put in it? If you put too much in it, it's TMI. If you cut and paste, it's not meaningful. And if you boast and you're unrealistic, then that's greenwashing. It's the flavor of the day. It's the flavor of the day. The benefits of sustainability reporting is that I hope it will change behavior. Because if we measure something and we report something, we can monitor it, and year on year on year, there'll be a demand for an improvement. You promised by 2030 we'll be carbon neutral. You promised by 2030 we would be recycling all of our plastics. And where are we on this journey? Where are we on this journey? Generation Z, your generation, cares. I've got one friend who's a vegetarian. There was 8 of us around the 8 chaps out the other night, and one of us was a vegetarian. But of 8 of us, 7 of us had children who were vegetarian. All right. So the generation down, your generation is much more socially aware, much more into sustainability reporting, much more commercially, much more green. And if you as investors, if you as employees, if you as society have a demand for information about what big companies are doing with the scarce resources of this world, If you have that information need, if investors have that information need is not being wholly met. It's not being wholly met. And that's why sustainability reporting is needed to bridge the gap. And from the investor's point of view, if they have more information about the business, from the investor's point of view, the more information they know about the business, the less risk they have. What is the company's attitude towards electric cars? What is the company's attitude towards the fact that, you know, coal and oil as industries are going to be switched off? What is the attitude towards plastics, single-use plastics? What is the attitude towards the fish that's served in the restaurant? Is it from sustainable sources? And if the investors know that the management are on top of these risks and opportunities, all for the better, de-risks the investment. Staff are going to be happier, yeah? And you're going to win customers, individual customers. As consumers, we're interested in putting our money, yeah, where our mouth is. And so we want to buy things which are sustainable. We want to use our money and our power in that way. And certainly when I was looking at the accounts of Tesco's, so Tesco's are a supermarket chain in the UK, and they're into their fish. So they require that where they buy their fish from, their tuna, is from a sustainable source. That the seas are not the sea, you know, the smaller fish are let back, all that kind of stuff. And so because Tesco's is green, because Tesco's is sustainable, it reaches out to its suppliers and says, I'll only give you a contract, I'll only sell your product in my shop if you are sustainable. So it has a ripple effect. So if we're a small business wanting to do business with government, wanting to do business with Tesco's, wanting to do business with other businesses, and we are not woke and we're not socially aware of our sustainability responsibilities, we're not going to get the business. It pays to be good. The music has changed. So it's not about being an early adopter anymore. There is only one planet. There is no planet B. There is no planet B. Yeah. So there's a call to action, and us as accountants are part of that. Right. Gosh, I have been talking and you have been listening. And we have been going for just over half an hour. So I'm just going to pause for a second. And I'm going to invite you to read this question, please. So it's a past exam question. And you just have a moment, please, to RTQ. Read the question. Discuss why the disclosure of sustainable information has become an important and influential consideration for investors. All right. So that's the question being asked. It makes it very clear that it's not about whether or not they are important. They are important, and it's why they're important. Yeah, what the reason is, or reasons, and it's for 8 marks. The current developments in sustainability reporting show there's a global trend towards more extensive and more meaningful narrative reporting. Improvements in quality and scope are driven by regulatory demands, market demands. Sustainability investment includes an approach where environmental, social, and governance, ESG factors, guide the selection and management of investments. So we're looking at this very much from an investor point of view. And this is the examiner's answer. And I noticed there was a proportion of you who confessed, who were honest enough and said, look, I find the examiner's answers intimidating. I lack confidence. They knock my confidence. And I'd like you to spend a moment, please, looking at this perfect answer, looking at this examiner's answer. Now, I'm not sure I want to read this answer out word for word for word for word for word. It's interesting that in the middle there, yeah, they talk about the Global Reporting Initiative and how disclosure of information, yeah, it would be better if it was done in accordance with these guidelines, but they are only guidelines. And it's interesting that they talk here about screening strategies at the bottom. So investors may decide not to invest in companies without sustainability reporting, for example. And there's an acknowledgement that it's about de-risking the investment. Yeah, a discussion of the risks and opportunities. So sustainability reporting, and when you look at the marking guide to that question, it doesn't really help me. And this is where I want to give you a little bit of confidence, because I want to show you an answer to this question which bears no relationship whatsoever to the examiner's answer, but nevertheless is an answer. So same question, 8 marks. Discuss why the disclosure of sustainability information has become an important part of influential consideration for investors. 8 marks. Some investors have ethical values, charities, or they've chosen to adopt those values. Life is not all about money. Now, there are spelling mistakes in that, but this exam is not a test of spelling. So that is not something which is penalized. The disclosures made by these companies are voluntary. They're doing so for a reason, to meet the information needs of users to reduce risk. I think that's really powerful. Why is it important for investors? It's about reducing their risk. It's about understanding the business's attitude towards the changing dynamic environment in which we face. Cash flow. I wonder if cash flow will come up this time. More of that later. Cash flow is a useful place for investors. It's true. Because investors want dividends. Absolutely, they do. No way is this answer worth 8 marks. At the same time, it's not worth no marks either. So it's not worth 0, and it's not worth 8. It's worth something in between, maybe 1, maybe 7, maybe 2, maybe 6. What do you think it's worth? You be the marker. You decide. You tell me. You use the chat box. You tell me. You've read the question. You've seen the examiner's answer. Two. Canary says 4. Aaron says 4. Joanne says 4. Angela says 3. Jacqueline says 5. Dylan says 4. Mohammed says 7 for effort. I like that. 7 for effort. Claudia says 5. Chinwei says 4. Naeem Nordin says 4. Yeah, look, you know, Chris says 4. It's interesting, isn't it? There's a range of views. And sadly, we don't get marks for effort. So let's take a slightly closer look at. Thank you for your contributions. This first paragraph, I think is worth a mark, because I think it's making a very valid point that users are not just interested in the ability of the company to make profit in the short term, that they're interested in other values, that the business is not just about money, all right? And that we want to have an efficient use of capital to businesses which are sustainable. So that is definitely worth a mark for me. The second paragraph, this business about reducing risk, is really key for me as well, because we're looking, that ties into the investors. Both of these answers here are really looking at the investor's perspective, which is what the question was about. So I like the idea that they are reducing risk so that there's a better understanding. I also like the idea of referencing some sort of comparability, some sort of regulation. The cash flow statement is a useful place for investors to look about going concern. And investors will want to know about dividends. I'm not really sure the cash flow statement is the place to look about sustainability. I just don't get that this sentence is okay, but it's not answering the question. It's not drilling it down. It's not addressing the issue that's in place. Yeah. But the fact that investors are interested in sustainability, because if the business isn't sustainable, then the business isn't going to have a future. I think that's a valid point. So a subjective process. But for me, I also go with 4 out of 8. Yeah, I also go for 4 out of 8. All right. So, you know, you must write something. If in the exam we write nothing, we end up with no marks. And we must address the answer to the question. We shouldn't just brain dump stuff down. You can do this. It's very difficult to get 8 out of 8. Very, very difficult. But there is no reason why you can't pick up 2 or 3 marks, 4 or 5 marks. Yeah, writing in short, sharp, simple sentences, leaving space. Anis, yeah, consistency of return, maybe, yeah. Because what an investor ideally wants is a certain future. What the investor ideally wants is for the business to know what cash is going to flow, and therefore what dividends can be paid out, because investors are interested in dividends. So had the question talked about the future, had the question talked about it would be that investors would like to know about the costs that will be incurred in order to change over to a sustainable business model. Because if you're going to replace all of your delivery vehicles with electrical ones, if you're going to install solar panels on your factory roofs, in the short term, that's a cash outflow because you're investing in green energy. So what an investor might want to know is, in the next 3 years, we're going to spend X billion dollars on electric cars, on solar panels, on better use of water in our manufacturing process. But in the long run, if you've got solar panels, in the long run, if you've got solar panels which are generating the electricity to run the cars, to run your delivery vehicles on, in the long run, you're going to be saving money, and there's a break-even point, and there's a sustainability there. So shareholders, you're not going to get a dividend this year and next year because we're spending the money doing something else, but this will lead to high dividends in the future. That's exactly the sort of information that a sustainability report should contain, that investors would want to know about, that links into cash flow. But simply saying, look at the cash flow, which is an historical document, look at the cash flow for last year, that's going to tell you about sustainability. It's not. So context is all. Development of the points is all. And the exam is expert marked. So you can make that point about cash flow, investing in solar panels, investing in systems that will save money in the long term. You can make that point and pick up the marks, even though it may not be something that's directly in the examiner's answer. Chris, I agree with you 100%. If the market perceives that the company is not green, customers potentially drift away, and investors anticipate the customers drifting away, so they drift away. So if there's less sales, less people buying the shares, it's not great, is it? Whereas if we have a sustainability report, we're communicating what's going on. We're de-risking the investment. We're assuring the market that we're on a journey to plastic free. We're on a journey to sustainability reporting. Yeah, I mean, there's great opportunities for green investment. If you're a manufacturer of cars, instead of talking about, oh my God, it's terrible that diesel's being phased out, the UK government has recently announced that by 2050, all new cars will have to be electric. All new cars will have to be electric. So manufacturers have got an enormous opportunity there. Yeah, so to make that necessary investment. Absolutely, we can talk about those things, definitely. I'm pausing for a moment. We have been talking for nearly an hour. So I'm going to stand up. We're going to take a 5-minute comfort break. So this is an opportunity for you to go to the toilet. This is an opportunity for you to get some water. This is an opportunity for you to walk around. I'm going to stand up. I'm going to have a stretch. This is an opportunity for you to go on LinkedIn and find me and connect with me on LinkedIn. But yeah, when we come back, we'll be talking about a topic which we all know is going to be in the exam. And I want to use a past exam question. I want to go live on the ACCA practice platform and work a question on this area. So don't go away, but please, let's have a 5-minute break. Thank you very much. Okay, let me think about making a very gentle restart. Thank you for giving up your time this afternoon. I want to spend a little bit of time talking about ethics. It's really important in terms of the exam. And I want to work an exam question and show you how that's applied. So we've got a free prize draw coming up later as well. And we'll be taking another break, obviously, before we finish, because it's a long session and I'd need to stretch. So the truth is that accountants are professionals. So that means they're like lawyers and doctors, pillars of society, people who should be respected, people who should act in a professional manner. The public look to us to uphold appropriate standards of behavior. And we have to be ethical because we're not mathematicians adding up numbers. 2 + 2 = 4. We're not following rules. We're following accounting standards which require the use of judgment the whole time because they're principles based. We have to estimate the useful life of an asset. We have to estimate the fair value. We have to estimate when control has passed for it to be a sale. We have to recognize when we've got control for it to be a sub. There's judgments all the time because our accounting profession is based on principles. And that means that we're not robots. We're using our human professional judgment. And whenever you're using judgment, you can cheat. Whenever you're using judgment, you can introduce bias. Whenever you're using judgment, you can twist and you can turn. And the idea is that as ethical accountants, we're not cheating, we're not twisting, we're not biased, that we're objective and that we're independent and we're competent and we act with integrity and confidentiality. We embody good professional conduct. Now, I've listed out there a few of the 5 ethical pillars, but you don't get marks in an exam. You do not get marks in an exam for saying there are 5 ethical pillars. Objectivity means, integrity means, confidentiality means. You do not get marks for dumping down, for listing out, for identifying. You don't. What you get marks for is application, application, application. So it's very much about being specific and contextualized. No boilerplating, please. So 10 seconds on each. Yeah, you know this is revision, but 10 seconds on each. Objectivity. An accountant should be independent. You can't audit your brother's or sister's business. Objectivity means that you can walk away and you're not biased. To be ethical, you need to know what you're doing. You need to know your accounting standards. You need to know the limitations of what you can do. You shouldn't take on work that you're not qualified to do. I'm a qualified ACCA member, but I get a friend of mine to do my tax return. I say friend, a colleague to do my tax returns, because I don't keep myself up to date on tax. I keep myself up to date on accounting, but not tax. Competence. You don't ask your GP, you don't ask your general doctor to do your heart surgery. Yeah, they're all doctors, but they specialize and they take on work that they're competent to do. Don't swear, reply to your emails, don't bully, be a nice person, do unto others as you would expect them to do unto you. Behave professionally. Be honest. Do the right thing. Have pride in your conduct. Don't be devious. Yeah, act with integrity. Your doctor doesn't, if you tell your doctor you've got some medical condition, your doctor won't gossip about it. Your doctor won't post on the internet, oh, I had an interesting person coming today. That Tom is worried about his, you know, no. You can tell a doctor something, you can tell a lawyer something and feel confident that they're not going to share it. We as accountants also need to command the same respect with our clients, that we shouldn't insider deal, insider trading. We shouldn't get involved in we shouldn't get involved in financially benefiting from information that we've come across in the course of our business. If we know the business is about to go bust, we're looking at them, we're attending meetings where they're discussing going concern and the audit report being qualified and all that kind of stuff. And or when this information gets out, the share price will fall. We don't tell our friends, oh, sell the shares, sell this company short. We don't do that at all. We respect the confidentiality. Now, I've got some standard advice, and then I want to show you an exam question, which is a little bit different, but I've got some standard advice. Where you've got a question 2, and there's a number of accounting issues, and then you have to comment on the ethical consequences and the accounting consequences of what's going on. Separate it out, deal with the accounting issues first. So you've got first accounting issue, second accounting issue, third accounting issue, then you've got the ethics. So the idea is that you separate out and you break down your answer. It's better that way than doing accounting ethics, accounting ethics, accounting ethics. Because if you do accounting ethics, accounting ethics, and accounting ethics, what you might find is there's repetition, because you're not quite seeing the wood for the trees. You're just getting stuck into the detail. It's easy for me to say this, but so often ethical issues can revolve around transactions with related parties. So whenever we are transacting with a parent, are we being forced to sell the goods at a higher price? Whenever we're transacting with a director, are we being forced to sell the goods at a lower price? Any transaction with a related party, potentially, I'm not saying it will, potentially has an ethical issue, all right? Because the concept of related party, underneath a related party relationship is that word, is the C word, control, or significant influence. So one party can be abusing that relationship. So keep your eyes open for that. If there is an accounting treatment, it's normally wrong. And if it's normally wrong, you can then pick up the concept of competence. I've yet to see an exam question where the answer is the accounting treatment adopted by the company is perfectly correct. The directors made every disclosure in a perfectly correct way, acted ethically every step of the way. Well done. Never seen a question like that. So if you're in doubt about the accounting treatment, say it's wrong. You might squeeze a mark out of that. You're really going to get the marks though when you give the correct accounting treatment and link the error to competence. But you might find that the competence issue occurs time and time again, that the competence issue, and then you think, hang on a minute, maybe this is not competence, maybe they are maybe it's not an accident that they keep missing out expenses and not recording losses and overstating revenue. And after all, they've got a listing coming up. And after all, the directors have got options. And so you begin to think, well, hang on a minute, maybe just maybe they're manipulating the accounts for their own benefit. And therefore that's creative accounting. And therefore that's unethical because it shows a lack of integrity. They're being dishonest. So individually, mistake, 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 individually, competence, 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 but collectively, you begin to see a pattern, and that's what I mean about the wood from the trees. So the traditional question, the basic approach, accounting issue, accounting issue, accounting issue, then reflect on the ethics, then reflect on the ethics. Now, ethics can also occur in a non-accounting environment or a non-IFRS environment. And this could be to do with bullying. This could be to do with bribing. If there is a hint within the question, if you prepare a cash flow budget that is optimistic, misses these figures out, so the bank will approve us a loan, then I'll give you a bonus. It begins to sound a little bit like a bribe that if you falsify the numbers for the bank, we'll reward you. So look at the wording of the question, and if there's a hint of, if you do this, which is a bit dodgy, I'll grease your palm, I'll give you promotion, I'll validate your probation period, that, I would argue, is unprofessional behavior, and you've got a conflict for the individual who's got to who should be doing the right thing, even though it means they may miss out on promotion, miss out on the pay rise. But the wording sometimes is the other way. Unless you prepare a cash budget that gets the bank loan approved, unless you do that, you'll be fired. So it's just the yin and the yang, isn't it? You know, some managers bribe, some managers bully. But what we as individuals have got to do is to follow the true path, the way and the light. What we as individuals have got to do in the exam is to argue that we've got to stick to our ethical and professional principles. We've got to act with integrity and not be bullied and not be bribed, and to recognize that behavior and call out that behavior as being unprofessional. When you go to a lawyer and the lawyer hears your problem, analyzes your problem, your lawyer says at the end of the conversation, sue, or the lawyer says at the end of the conversation, divorce or settle. This is my advice. When you go to a doctor, at the end of the consultation, normally what the doctor says is, here's a prescription, or lose some weight, or stop smoking, or we're going to chop your arm off, whatever it is. So the doctor does the diagnosis. I think you've got diabetes, I think you've got coronavirus, whatever it is. And therefore, we as accountants in this ethical dilemma must do more than just a diagnosis. Identifying the 5 pillars gives you the diagnosis. You're diagnosing that it's lack of integrity. You're diagnosing that it's professional behavior. But what we as accountants in the exam have got to do is to say, and therefore you should, action points. And if you can come up with some action points, then those action points are going to get you marks, even if they're not specifically asked for. It's part of the professional marks. It's basically part of what you're expected to do. So if you're in an ethical dilemma, you could, flag that up and discuss it with an independent non-executive director. You could go and get legal advice. You could, think about that whistleblowing thing. You could consider resignation. But the point is, you try and conclude an ethical answer, an ethical discussion with an action point. Right. I want to do a question now. I want to do an ethics question now. Slightly different one, a slightly kind of current one, if you like. So this involves me Kang Hong Yap says, is it okay if we provide more than 2 action points? Yes, it may well be. It may well be appropriate. It's very difficult for me to be 100% definitive on a question. But if you provide 2 action points and one of them is a bit wacky, one of them is a bit weird, one of them is inappropriate, doesn't matter. You don't lose marks. So yes, it's okay if you provide more than 2 action points. I suppose what you mustn't do is to provide a whole page of action points, because it's only a mark or 2 and time is money. Is that okay? Does that make sense? Excellent. Right, let's go disco. Let's have a look at test reach. And here we are. We are in test reach. So you can see up here. Now, I didn't do it as a poll. I did one of these sessions the other day, and I was asking about how many people have been on the ACCA practice platform, how many people had been on sort of test reach. And actually, I was quite surprised. There was a substantial minority who'd never been on the practice platform. Maybe this is why I'm going grey. You know, it's really important that you are familiar with the practice platform. And the email address there, you can see at the top left-hand corner, cbept.accaglobal.com. That's the portal. But I guess the way that you normally access it is through your My ACCA account. Now, question 2 of each exam. Question 2 of each exam is the ethical question. So Columbia here is question 1. And this is Bismuth is question 2. So this is the question I want to have a look at for ethics. Now, let's spend a minute or two just making sure we're comfortable with what we've got going on in a question like this. You've got an opening blurb of information here. Bismuth is a mining company. They get mining earnings from mining projects, return on the investment. The exhibits are on the left-hand side. You've got impairment testing of mines, exhibit 1. Class A and B shares, exhibit 2. And blockchain technology, 3. Blockchain technology provides information about the ethical issues created by the implementation of blockchain technology. Now, the information should be used to answer the requirements within your chosen response area. So looking at the requirements of the question, now I can see the requirements of the question are threefold. A, bismuth impairment loss, that's exhibit 1. B, class A, class B, that's exhibit 2. And discuss the ethical issues by blockchain, that's exhibit 3. So what I'm trying to say to you is this. I don't want to be overly cynical, but what I'm trying to say to you is this, is that this is not one 20-mark question by any stretch of the imagination. What this is 3 separate questions. And you can see what I've done is I've used the control copy paste formatting to get rid of the requirement window and to reformat the information into the word response area. And you lose a bit of formatting, so you need to spend a moment or two making sure this is right. Now, when you open up one of the response areas, yeah, again, it's appropriate to resize and reformat these so that you've got a little bit of space. Yeah, going on here, and I'm comfortable. I was running a mock exam with my students over the weekend, and a couple of them had problems, and it was clear that they hadn't actually used the practice platform as much as I thought they'd had, because they seemed to be slowing down and having problems over how they format things. Now, I'm pausing here for a minute. It is 53 minutes. Yeah, at the moment, let's call it 54 by the time I faff around. We have got here a 10-mark question. Yeah. So we've got here 10-mark question because we've got part C, the ethical part marks. That is roughly worth 18 minutes of your life. Yeah. And so if that is 18 minutes, that is 12 minutes past. All right. So I'm going through to 12 minutes past, and I'm going to try and create an answer that you could achieve. Yeah, that you could achieve. So discuss the ethical issues relating to the implementation of blockchain for both the chief accountant and the finance director. Yeah, and the finance director. So we've got issues around the chief accountant. Yeah, we've got issues around the chief accountant that I'm interested in exploring. And we've also got issues around the finance director that I'm interested in exploring. And in this particular question, we also have to include appropriate actions that we recommend that we should take. And by control, copy and pasting the requirement of the question into my word response area, I've got that visually there the whole time. Bismuth plans to implement blockchain technology to store all of its data relating to its mines and ethical source of its raw materials. The chief accountant is Ms. Pleasant. So the chief accountant is Ms. Pleasant, and is currently developing blockchain technology with filed for patent. Ms. Pleasant has only recently taken up post and has discovered that her work done by her previous employer is relevant to the project. Hey, that's great. If Ms. Pleasant discloses her information, it will compromise this information. It will compromise a patent process at Gypsum. So Gypsum are her previous employers, but it will consolidate her position as chief accountant in Bismuth. She had signed a confidentiality agreement. She signed a confidentiality agreement, but the clauses were not clear and not specific. So the chief accountant has an ethical dilemma here, I think. Ms. Pleasant has significant knowledge of blockchain technology, but the finance director, Mr. Fricklin, so the finance director is Mr. Fricklin, has limited knowledge. So the finance director has limited knowledge. Mr. Fricklin said there's no need to spend a lot of time doing something. Ms. Pleasant is worried that Fricklin's lack of technology and legal knowledge. So she feels that Fricklin has a lack of technology and legal knowledge. So in other words, she feels that Fricklin is basically incompetent. Some of the data has gone missing, and she thinks Fricklin has erased the data and tried to sabotage the project. Mr. Fricklin has told the directors that he has an in-depth knowledge. So I don't know, you know, a bit scatty, and I like just to kind of get on with things. So the finance director is Mr. Fricklin. What am I going to say about the finance director here? So he's lied, isn't he? Yeah. The finance director has has told the board that he has an in-depth knowledge of this new technology. Now, you've got to be a little bit careful because all that is describing and taking the information out of the question. I need to relate it to ethics. This appears to be misleading. This appears to be misleading, as it is suggested that Mr. Fricklin has a lack of up-to-date knowledge. It is unethical to misrepresent. It is unethical to misrepresent to the board of directors. It is dishonest and shows a lack of integrity, which is a key ethical pillar. But you know what? It's more than that, isn't it? It's also potentially a lack of competence. Yeah. In addition, Mr. F being prepared to take on work that he is not really able to do is unethical, because he does not have the competence to perform these duties. I'm a teacher. I've been learning a lot about online technology in the last few years about delivering stuff. I really don't know much about blockchain technology, but this question isn't about blockchain technology. I don't have to explain it or define it. Yeah, so I said it is unethical because he does not have the competence. So let's talk about the actions that you should take. Mr. Fricklin should receive training both on ethics, so he knows the right thing to do, and also on blockchain technology, how else is he expected to learn and improve? Yeah, you know, so I'm bringing some actions for Mr. Fricklin. Now, is there anything else about Mr. Fricklin? I think there is, isn't there? I'm looking again at the question. By setting up my page this way, I've got the requirement in front of me, I've got my answer, and I've got the information, I've got everything that I need, and I haven't got too many windows open. This business about erasing data, is something that concerns me. So I can go back and I can edit here. The suggestion that Mr. Fricklin is erasing data is a serious matter. Maybe I should deal with this as a separate point, because I think this overlaps with I think this overlaps with our friend Pleasant, because there's going to be some actions here. So let's talk about the data erasure. The suggestion that Mr. F is erasing data is a serious matter. Yeah, this is not in the best interests. This is not in the best interests of the company, and maybe a criminal act. And maybe a criminal act. It is certainly unethical, lack of integrity. Now, it's Ms. Pleasant who has, what does she have? Suspicions. She thinks who thinks that, yeah, Mr. F has done this. She now has an ethical dilemma. She now has an ethical dilemma because one of her co-workers, she thinks is a thief. She thinks is a wrecker. So she's got to do something about that. She must air her views. She must air her views. To do nothing, to turn a blind eye, would be unethical. If you think your employer is being robbed, you've got to do something. The challenge is to report the matter to the correct person. Should she confront? Should she confront Mr. F? Because if she did that, there would be a risk that he could cover the tracks, yeah? Go direct to the board, or maybe there is another channel in the company for her to whistleblow. Maybe there's an independent non-executive director. Now I've got to be a little bit careful because I said I would do this question and I would finish it at 12 minutes past, and I'm only kind of halfway through. And I've got to think about the chief accountant, Ms. Pleasant, and we haven't really talked about her. She's the one who is developing the blockchain technology. She's recently taken up post. She has a conflict. So Ms. Pleasant, Ms. P, yeah, is grappling with the issue of confidentiality, with the issue of confidentiality. She is bound by both the ethical pillar of confidentiality and the vague legal agreement not to damage, not to use her inside information, and that's the way of saying it, not to use her inside information from a last employer to damage her last employer. That would be unethical, yeah? And yet surely she can use her general skills. And yet surely she can use her general skills and knowledge to about blockchain in her current post. Yeah, surely she can. She needs to reflect. She needs to reflect. Yeah, she needs to reflect on where to draw the line. And to make sure she acts in a professional way. I mean, even if she did kind of spill the beans, even if she did kind of say to Bismuth, look, I know all this stuff. Here's what your competitors are doing because I was working on their project. In the short term, that might consolidate her position within Bismuth because, hey, suddenly she's the star of the moment. But in the long run, Bismuth are going to realize that this is someone who can't be trusted. You know, so whilst in the short term, should she be unethical and share Gibson's secrets, it would help her, but it would mean her employers. It would mean being unethical, and her employers knowing that she could not be trusted in the long term. So there you go. I'm thinking that I'm almost running out of steam. I'm just looking at my answer. I'm looking at the time, and I'm structuring my answer where I talked about the chief accountant. I'm structuring my answer where I've talked about actions the chief accountant needs to take, basically reflection. I'm looking at my answer, which is about Mr. Fricklin. Yeah. I'm talking there about the actions that Mr. Fricklin should take. That erosion of data is a duplicate matter. And it is now full-time. It is now full-time. Yeah, so what you've seen me do there is to produce an answer where the spelling is not perfect, but the answer is produced within the time allowed. And that's an answer which I am hoping for, yeah, a good mark. It's not a perfect mark. It may not get me 10 out of 10, but it's on its way there, surely, because I've linked the question to the ethical pillars. I've shown it as a structure. I think I've dealt with most of the issues there. And clearly in the exam, you've got no real ability to pause and pat yourself on the back. But I'm pausing here for a minute. I am curious to know what you think of my answer. I'm curious to know. Some of you may know this question already. Some of you may have read the examiner's answer and realize the examiner's answer is longer and more professional than mine. Hannah says, are we allowed to use short forms of the names of people in this question? Well, I have, haven't I? You can see that what I've tried to do is to, my typing skills are not brilliant. Your typing skills may not be brilliant either. It is quicker to refer to it as Ms. P and Mr. F. But what I have done is I've shown at the top of the heading that I'm referring, the chief accountant. This is partly for my sanity. The chief accountant is Ms. Pleasant. And then I refer to that as Ms. P. So I'm therefore using that as a time issue. If I was the examiner, or I was preparing a model answer for printing and circulating around the world, I'd probably put in the full answer. I'd probably put in the full name. But if I'm here now in the middle of an exam and I've got 18 minutes to do the best possible answer within the time allowed, I'm going to take a practical shortcut. So do as I do, Hannah. Do as I do, Hannah. You are allowed to use short forms because we've stated it. Candy says, how do we know how the marks are allocated? The answer is we don't. We don't. I mean, in the exam, you don't have access to the marking guide. Yeah, so we don't know exactly how the marks are allocated. All that we can do in a question like this is to speculate. We are told in the question that there are 8 marks available, and we're discussing the ethical issues for both the chief accountant, for both the chief accountant and the finance director, for both of them. Yeah, they're both qualified. And so if it's 8 marks, I'm thinking 4 and 4, and then 2 professional marks. Maybe I'm thinking 3 marks for the discussion, 1 mark for the action. 3 marks for the discussion, 1 mark for the action. Something like that. So we have to use our judgment as students, as lecturers. And the way to get the right length of answer is by using the marks and then writing down as much as possible within that time. Candice, does that answer your question? Good. Okay, thank you. Aaron says, could we say that Miss P's, there is a self-interest threat here? Yeah, there is. Yeah, there is. Absolutely. You could develop my answer further by acknowledging the fact that in a bit more detail that she has this conflict of interest, that the self-interest. Yes, absolutely, you could. Yes, I'm not saying this is the answer. I'm saying it's an answer that you saw me create live. It's not an answer. I mean, I have done this question before, but every time I do the question, I do it slightly differently. And it's as the mood takes me. But I can see the key features are confidentiality from the point of view of Miss P, what she does with the information of her suspicions to do with her fellow worker. That's the problem that she's got. And then the finance director, Mr. Fricklin, is just an idiot. And the most dangerous sorts of idiots are those people who don't realize they're idiots. He thinks he knows what he's doing, but clearly he doesn't. So I'm pausing for a moment. I'm just making sure that everybody is happy. And that is a specific question. Now, I've broken one of my rules here. What I say to my students is, I don't care the order. Arif says, can we structure our answer points by not following the sequence of the information available in the question? Arif, you want to be friends with the marker. You want to be friends with the marker and make your script as easy to mark and to follow as possible. So you noticed what I did in this question is I planned it by structuring it about the chief accountant and the finance director. I realized the question was being split into two. And my first heading was chief accountant and my second heading was finance director. And I tell you what I didn't do. I didn't use the scratch pad because the marker never ever sees the scratch pad. So don't bother with the scratch pad. So I planned my answer in the question. When it came to writing the answer, the low-hanging fruit for me, the bit that I just read that excited me the most was the finance director. So I wrote that answer first. But the way it's presented is in a traditional way, because the requirement said chief accountant and finance director. So I present my answer, chief accountant and finance director. And then there was the integrity issue, the destruction, the sabotage. I dealt with that at the end. So I wrote my answer in the wrong order or a different order, but I present it in the right order. And because it's word processing, it's so easy to do that, Arif. You can structure your answer and points in any way you want. In any way you want. But if you want to get those professional marks and you want to make friends with the marker, try and follow it in a natural order, in a sequence. So just like typical questions have, you know, a definition, discussion, 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 application, 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 then conclusion. It's much better to follow that sort of structure rather than randomize it all. Arif, does that answer your question? I mean, you can, but I'm asking you or advising you to try and be logical or structured in your answer. Yeah, is that all right, Arif? I'll take it. I'll take that. Excellent. Okay, thank you. Yeah, good question. Is it better to list all of the principles or not? There are no marks for listing all of the principles. You are not asked what are the 5 principles. So when you come to do SBL, in SBL, you'll learn about Porter's 5 forces, pest analysis, and you'll be applying those rather than saying, oh, in pest analysis, this is what we do. No, the client doesn't want to know that you've used a pest analysis. The client doesn't want to know that you're using Porter's 5 forces. The client wants advice on what to do in their situation. So there are no marks for listing all of the principles. So earlier you mentioned it is better to present the accounting issues first and then the ethical issues, but in the one you just did, it is shown as the accounting issue and the ethical issue together for each person in the question. Is this what you mean by how we to advise to present the answer? Just to clarify. Thank you, Hannah. Good question. I hope you've done plenty of questions. And a traditional ethical question, is based around accounting standards going wrong, about a particular accounting situation where problems arise. And in that situation, you deal with the accounting issues first and then deal with the ethical issues. This doesn't involve any accounting issues, Hannah. This is all about behavior. This is about blockchain. This is about lying. It's not about we've issued a financial instrument and we've shown it as equity when really it should be debt. You know, the asset has you know, fallen in value, but we haven't done an impairment review. Now, in those situations, I'd be saying, well, hang on a minute, the correct accounting treatment is to show it as debt, and this is why. The correct accounting treatment is to show it as an impairment, and this is why. And then the ethical issues arising from both of those are competence, maybe creative accounting, and dealing with the ethical issues at the end. So, Hannah, does that clarify where I'm coming from? I deliberately chose this question because it's slightly harder because it doesn't involve accounting standards, and the risk is that some people think they've got to explain everything around blockchain, and that's not the case. Is that all right, Hannah? So there is no accounting issue. Excellent. Yeah, excellent. Right, well, seeing as we've opened up this question and seeing it's a 4-hour session, I thought I would just spend a minute or two answering the next part of the question, which deals with the accounting issue. So if I look at the first part of the question, it's about impairment testing of mines. And if I look at this part of the question, I have here 5 marks. Now, if I have here 5 marks, I have here 8 minutes. If I look at the time, it's 24 minutes past. So 24, yeah, plus 8 equals 32. And then we'll take a break. So 32 past the hour is where we're heading for here. Discuss with suitable calculations. So we've got a discussion. That's one thing we've got to do. And we've got to do calculations. That's another thing that we've got to do. And we're doing it in relation to the impairment, and we've got 5 marks. Now, my gut reaction is that the discussion is probably going to be worth more. So the discussion, I'm thinking, is going to be worth 3 marks. It's normally the way. Bismarck owns mines, and the mines have a carrying value of 200 million. Bismarck owns mines, and the carrying value is 200 million. The company has committed itself to decommissioning the mines. The company has committed itself to decommissioning the mines at the end of their useful life and has created a decommissioning provision already of 53 million. So we've got some numbers to play with. They're unsure how the decommissioning provision will impact on the impairment testing. They are unsure how that's going to pan out. They're unsure how that's going to pan out. At the end of the life, the components are sold, and then we've got the various bits of information. So, an asset is impaired when the carrying value exceeds the recoverable amount. Don't like that. Not good enough. Let's say Bismuth's mine is impaired when the carrying value exceeds the recoverable amount. That's softened. That's a lot better. Yeah, that's softened. That's a lot better. The recoverable amount. Well, now let's have a new sentence. The carrying value of the asset is given at 200 million. The recoverable amount is the higher of the fair value less cost to sell, and the value in use, i.e. the present value of the future cash flow. There is no suggestion the asset's going to be sold. So we look at the future cash flow. So if I'm going to do an impairment review, I'm going to open up a little table, bish, bash, bosh. I'm going to open up a little table here. Yeah. And I don't want it there. I want to open up the table at the bottom. So I'm going to open up a little table now, bish, bash, bosh. Yeah, let's have too many. So we're doing the review. And what have I got? I've got a carrying value of an asset. So I've got the carrying value, and I've got the carrying value of the mine. And I'm told the carrying value of the mine is 200. Told the carrying value of the mine is 200. And then I'm wanting to look at the value in use. And so what money comes in and what money goes out, the present value of the future cash inflows. So we got this. We've got cash coming in from the sale of the components, which will be 20. We've got the sale from the output. So we've also got the cash coming in from the output, which is 203. And then we've got the cash that goes out, and the cash that goes out is the operating cost, which is 48. The operating cost, which is 48. What I'm then going to do is take my calculator, do my calculator, whoops, take my calculator here, take my calculator across. No, it doesn't want to go across, doesn't matter. Let's make it a standard calculator. And what have we got there? 20 plus 203 minus 48. What have we got there? 175. There 175, and then we got there 25. So we've then got the impairment loss of 25. Now, some of you may be screaming at me, and I do want you to scream at me. Because I'm stopping here now. And what I would like to do is to say that I've been a little bit naughty with you. So I hope we're good enough friends for me to be a little bit naughty with you. How many marks do you think that's worth? Can you use the chat box? Because this is not worth 5 out of 5. I think my ethical question really was worth 9 out of 10. You think it's only worth 1 mark? Ouch. Canary says it's worth 3. Lab says it's worth 3. Banslin says it's worth 2. Foo says it's worth 1. Dylan says it's worth 3. 3 or 4. 4. Oh, I'm getting some nice 4s. Angela says it's worth 3. Oh, based on research. Okay. Now, what I have done is given you an answer that I've seen many times students produce. And this answer is not a perfect answer. It's not 5 out of 5. As I say, my ethical answer that I produced really was, I think, worth 9 out of 10, if not 10 out of 10. This answer, I know full well, is inadequate. I say inadequate if I judge myself as the prize winner. I say inadequate if I judge myself as a lecturer. If I say to myself, I want to pass the exam, then I've got 3 out of 5. And if you walk away from this exam with 3 out of 5 from every question, you get 60% and you feel very, very good about yourself. Because it is absolutely true that Bismarck's mine is impaired when the carrying value exceeds the recoverable amount. That is true. And I would give that a mark because it's been softened. It's been softened. I'd also give a mark here because when we talked about the recoverable amount, we haven't just talked about the recoverable amount, we've applied it in the sense that the asset is going to be sold. So we should be looking at the future cash flow. So I think my marks in the discussion are 2 out of 3. 2 out of 3. It's not a perfect discussion. I'll come back to that in a minute. When I look at my numbers, those of you who might be familiar with the answer might be familiar with the fact that numerically my answer is correct, that the impairment loss is 25, but I would still only give this 1 mark out of 2. 1 mark out of 2, because there's something a little bit awkward or a little bit wrong about the impairment review. So I'm going to give myself 2 out of 3 for the words and 1 out of 2 for the numbers as it stands at the moment. As it stands at the moment. That's a live experience. Time out. Instead of taking a break, let's just take a time out for a second. How are we going to make this better? Technically, what have I done wrong? Or technically, what have I failed to address? I don't need to explain the workings. Thank you, Hannes. Thank you, Hannes. No, I don't need to put in the $sign. The $sign's not going to get me any extra money. $sign's not going to get me any extra marks. Candice is correct. Hannes is correct. I've turned a blind eye to the decommissioning. So let me go back into my answer. Dylan, yes. Now that would be safe. Is impaired with the camera, that would be safe. And I could add Dylan there. This is Dylan's point. You could either put the impairment losses charged to P&L because there's no suggestion the asset's been revalued. So that would be nice. And what Fee is saying is absolutely the point about the 53. Now, if we've got a mine and we've got a responsibility to clear it up, if we sell the mine, we sell the responsibility to clear it up. We can't look at the mine on its own as an asset without taking into account the decommissioning. So the carrying value of the asset is given at 200 million. This is not separable from, the provision, from the obligation to decommission, It is like a mini cash generating unit. The 53 must be considered as well. And the 53 has been capitalized into the 200. So in that way, we are addressing it. So I think my words now are worth 3 out of 3. And if I were to just tie that in, now the words are worth 3 out of 3, because I've said 3 things. I've given the general principle, I've then applied it to the carrying value, and I've applied it to the recoverable amount. And what you've got here is the mine is the obligation. And so the obligation, which is not separable, means that effectively the net figure you've got as the carrying value, is 47, 147. And what we now need to have here is a new row there. We need to get rid of that 175. And we've also got to spend, to decommission it, 53. So this means that when we come to the calculator, what we're looking at in the calculator is 223 minus 48 minus 53. So that gives me a figure of 122. And if I have a figure there of 122, 147 and 122 is 25. I don't need a calculator to sort of validate those numbers. So there you are. I'm now thinking, now post edit, this is worth 5 out of 5, but time. You've got to be technically on the ball to realize the provision has got to be dealt with in that way. And if you are, you just do it correct straight away. So, you've got 2 twin enemies in the exam. One is time and one is knowledge. And if you've got the knowledge, ironically, it does kind of slow you down. Yeah, is that okay? Something else that I'd like to show you is, well, what I have shown you is that when the numbers are relatively simple, for me, it's okay to do the simple numbers in a table like that. It's okay. It's okay. And if you wanted to, of course, given the time, given the effort, you could go and, put in little £1 million, put in little million things there and just tidy things up a little bit, but it's not going to earn you any extra marks. So you've got to be really careful with that. Now, the other thing, and Lo Chi Sing is just picking it up, that I wanted to show you is that you don't have in any way, shape or form to do your numbers in the word in the word response area. You can pick them up and deal with them in the spreadsheet. All right, which means that you at this stage probably have 3 windows to be navigating. And you can see here's one I've done earlier. And you can see that in the spreadsheet functionality, I've gone for the correct answer straight away. And when I've been using here, there's no auto sum function. So if you're only familiar with Excel, you've got to get familiar with this spreadsheet functionality. I've had to, cell program the 122, and you can see there the information. All right, so a marker will be able to see, and I've just done mental maths for those 2 for the 147. Yeah, it doesn't need any clarification, but you can see there for the 122, I've done it. So if you want to use the spreadsheet, use the spreadsheet functionality. If that makes life easier for you, don't write the answer in the spreadsheet. Don't write long words the narrative answer in the spreadsheet. It makes life difficult and awkward for the marker. The marker is much more comfortable marking words in the word processor. All right. They can also mark numbers in the word processor if you use a table. And you have to work out your own style. Do you prefer using a table for a simple calculation like this? Or do you prefer using a spreadsheet for a simple calculation like this? You decide. You're an adult. You do what's best for you. You do what's quicker for you. But make it neat, make it logical. So Hannah says, so Fee says, is it possible? Yes, it is possible. You would derive, yes, if you were given two different numbers, you would take the higher one. Fee, yes, it is possible that, but we weren't given what we could sell it for. So therefore the recoverable amount had to be the value in use. If we were told we could sell it for, if we were told we could sell it for 125, we would have taken 125. If we were sold that we could only sell it for 120, we'd take 122, because the value in use as 122 is the recoverable amount is the higher of the two. Hannes says, can you explain why deducting the 53? Well, Hannes, you see, there you are. It was brought up, the 53 that was missing. We managed to get 3 out of 5 without dealing with the 53. I thought the carrying amount of 200 should have taken into account the 53. Okay. We've got a mine. And then we realized we've got an obligation to decommission the mine. Could be legal, could be constructive. When you recognize that obligation in full at present value, you credit the liability, you recognize the liability, and then you debit the asset. So you capitalize that provision. So you capitalize the cost of installing it and the cost of uninstalling it. The cost of the mine, yeah, you buy the land, the cost of digging the hole, yeah, the cost of removing the hole, the decommissioning cost. So the decommissioning cost is part of the 200 because you've credited 53 as a liability and you've debited 53, and that's part of the 200. So you've got a separate asset and a separate liability, but conceptually, they can't be separated out. Conceptually, if we're going to do a test on the viability of this, then or we were to sell it, you're selling the mine and the obligation at the same time. So they need to be netted off against each other. I hope that helps, Hannes. Gosh, time flies. Now, last time we took a 5-minute break, and this time I'm going to suggest that we take a 10-minute break. Stand up, move around. I'm going to make myself another cup of tea. When we come back from the break, we'll do the prize draw. When we come back from the break, we'll do the prize draw. All right. So one of you is going to come away with an opportunity of doing a mock exam with me, getting it marked by me, getting feedback, getting that all processed out. And what I would like to do is be able to onboard you and sort you out straight away. So let's take a 10-minute break. And when we come back from the 10-minute break, we'll do the prize draw. Thank you for giving up your time this afternoon. We've been looking at the current issue of sustainability reporting. We've been looking at ethics. We've been looking at applying questions. And I still want to have a look at deferred tax. I still want to have another little dip into the practice platform. And I still want to have your questions and answers. So it's always a very full and action-packed time. But now's come the opportunity to think about a free draw, a prize draw. And I'm going to be talking about here my mock examination. All right, so I'm an SBR online lecturer, and through my website, through the internet, I offer my students a mock exam, and it's an original mock exam, and it's sat on the ACCA's own practice platform. I rent a space from them, and not only do you get to do the mock, but you get it marked, and you get feedback, and then you get video of me debriefing that mock exam. So it tells you how you can improve as well. I also, for my students who come on to the mock exam, provide them with WhatsApp support so that their queries can be answered, and I share information as well. And this final exam, this mock exam, is given to you at a window to do of your choosing. So you would, if you win this prize draw, be able to go on to the ACCA, go onto my website, I'll send you the instructions, go onto the ACCA practice platform. You would be able to do a timed exam, a whole full original mock exam over the weekend of the 26th, 28th of November. So the way that I'm going to play this is, I did think about asking you a technical question and who would be fastest on the draw or whatever, but I thought I would go with something really quite random, that we've all got a birthday, and my wife, Jenny, she has a birthday. So my birthday is the 15th of March, but that's not the answer. What I'm looking for is your birthday. So I don't want to know the year that you were born, doesn't really matter to me, but it's the date and the day of the month and the month that you were born. And I can see 8th of June. And I'm looking. Oh, I'm looking. They're all coming in. There's a lot of them coming in. I haven't seen the exact date yet. It's probably going to have to be one quite near. I'm glad there's lots of you who have entered. I'm glad there's lots of you who are keen. This is good. This is good. I haven't seen the exact date yet. I will go back and I will double check. Everyone has a different birthday. 25th of December, Christmas Day. Is anyone's birthday today, I wonder? Anyway. Back I go. 28th of Feb. Li Quang, 28th of Feb. Right, so if you're going to enter, let's do it now. So Brody has entered on the 5th of November. 5 more seconds before I say no more entries. 5, 4, 3, 2, 30th of February. That's impossible. 30th of February. I think you're cheating, sir. So stop. No more after Dylan. Right, I'm going to go back. She's born in February. So Lee's got the 30th of Feb, which doesn't exist, so that doesn't count. She's born in February, 28th of February. I can see. Not many in February. 2nd of February. So Lee. How unusual. October, June, March. Not many in February at all. 22nd of May, my magic number. I'm going back to the beginning. Some of you are very quick on the draw, which is great. 10th of March. 3rd of Jan, not many in February. Not many in February at all. Lots of you. 2nd of February, Nissalines come in there. 9th of Jan. Wow, how unusual. Not many in February at all. Right. Well, her birthday is the 7th of February, so I make that Nissaline. Have I said that name correctly? Let me just find that. Nissaline, you are the winner. Seventh of February, 2nd of February, you are the winner. Right, Nissaline. Now, you know how this is going to work. I'd like you please to email me your, I'd like you please to message me your email address straight away. Congratulations. Yes, I do think congratulations are in order. Yeah, so please, what is your email address? And then I will email you and get that sorted. And let's get this, just let me get it down now, and then I'll write it down. So if you could reply to that straight away. You don't need to publish that information to the whole group. You can do it directly to me on a private message, please. Nissaline, if you can do that for me now. Oh, okay, I can now see it. Good, okay. When this is over, I will message you with the appropriate details, and well done. All right, so there we are. That's a little bit of fun. I'm pleased that one of you is going to benefit from this free mock exam. The registration, I'm still taking registrations for it. And if you are interested, obviously let me know direct. But you know, I don't want to be spending time, too much time on this. So congratulations, congratulations very much indeed. All right, excellent. Right, what are we going to do next? A couple of things. Well, we've got 3 major things to do left. I want to do another question. Contact me directly on that. Let's not get involved. Let's not get involved with that now. Contact me direct on that, either through WhatsApp, through my website, whatever. You'll find me. It's not a problem. If you search my name on the internet, you'll find me. Not a problem. So 3 more things I want to do in this final session. I want to have a Q&A. So we'll deal with that at the end. So I'll allow 20 minutes, half an hour at the end for any questions on anything. All right. So if you've got any questions on anything, then use the Q&A functionality and I will address those. I want to have a look at another question on the practice platform and have a look at that. And also I want to give you a little bit of a brush up on deferred taxation. So this won't take too long and is meant to be a revision session. It's not meant to be teaching you from scratch. But I really would like you to understand why, how, and its application. That's what I'm aiming to do, just to brush up your knowledge. Now, I think, I'm telling you, that it is perfectly possible to report an accounting profit and for there to be no tax assessed. It's perfectly possible for us accountants to report a profit of 10 million, for tax rates to be 20%, and for no current tax to be assessed. That is perfectly possible. And there's lots of different reasons why that is possible. But if you've studied tax at all, you'll be aware of the idea of depreciation being added back. You'll be aware of the idea of losses being carried forward. You will be aware of lots of reasons why we adjust the accounting profit to profits chargeable for corporation tax purposes. But I tell you this, if there are two things in life which are certain, death and taxes. If you've made a profit of 10 million and tax rates are 20%, then eventually you will have to pay the tax of 2 million. And the fact that you haven't been currently assessed for tax doesn't mean to say that you won't eventually have to pay it. Because if you've made a profit of 10 million and no current tax has been assessed, all that you've done is defer the payment of tax. All that you've done is postpone the payment of tax. So you should account for a deferred tax liability of 2 million, and then you create an expense of 2 million. And the reason you account for deferred tax is the accruals concept. Or as the picture shows, a match. The reason you account for deferred tax is because if we are reporting a profit of 10 million this year, the tax consequences of that profit should be reported this year. So the reason we account for deferred tax is to ensure a matching process. It's an application of the accruals concept. That's the reason why we account for deferred tax. What's the film? What's the film? John Travolta is the tattoo on the right. Anybody know the film? Maybe I should have made that the prize. No, it's not the prize. It's not the prize draw question. Nobody knows the name of the film? No, it's not Footloose. It's not Footloose. It's a great film. No, we'll come back to it later. John Travolta was in Saturday Night Fever. He was indeed. But this is where he's talking about burger and cheese, mac and cheese. What do they call it? A quarter pounder and cheese in France. Pulp Fiction, I think it's called. Anyway, whatever. It's a great film. It's a violent film. It's an adult film, but I think it's a good film. Quentin Tarantino. Anyway, if you've got a revaluation gain of 10,000 and no current tax is assessed, I really, 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 really hope that you know the deferred tax implications of this. Because intuitively, without you having to think too hard, I hope, all that deferred tax is a tax rate multiplied by a difference. And the revaluation gain here is 10, that's your difference. And so you've got a deferred tax liability of 2 and a deferred and a tax expense of 2. And what's going on in a more formal language, I'll come back to later, but I want to trust your intuition there. Yeah, I want to trust your intuition. So we are matching the gain of 10,000 with the tax on that gain of 2 and reporting therefore post-tax of 8. If the gain was fair value through P&L, if the gain was reported in the P&L, so the tax implications on that gain would also be in the P&L. But if the gain was in equity, if the gain was in reserves, if the gain was in other comprehensive income, so the tax on that gain would also be in equity, would also be in reserves, would also be in other comprehensive income, because you are matching the tax and the gain. The reason you account for deferred tax is because we want to be complete. We want to have a faithful representation. The concept is that we pair together, get that, pair together, the profit and the tax. If you ignore deferred tax, you're not being faithful because you would represent profits in an overstated manner. Because we report profits after all expenses, and one expense is tax. And there are two things in life which are certain: death and tax. And if you've made a profit and you haven't reported the tax on it, then you're misrepresenting, you're not faithfully representing. The accounts would be incomplete. If you don't account for deferred tax, you're missing out a liability from the balance sheet, an obligation from the balance sheet. That is a powerful argument. I'm linking it back to the framework. I'm giving you an understanding. I'm giving you an opportunity to understand so that you can explain. If information is to be useful, it has to be a faithful representation that is relevant. Relevant means prediction. So if we are recognizing a deferred tax liability, we are saying that in the future that will have to be paid. So we are therefore making a prediction of a future cash flow. And if we're making a prediction of a future cash flow, so that is a relevant thing to do. In talking about deferred tax so far, I've linked it to the framework. I've given a small numerical example, but I've avoided using the language. Let me go back to this example and use the language. If you've got a revaluation gain, the carrying value of your asset goes up. If the carrying value of your asset goes up with a revaluation gain and no current tax is assessed on that, the tax base remains the same. So you've got a carrying value of your asset exceeding your tax base. That's a taxable temporary difference, and therefore you account for deferred tax on that. So in terms of crude, how we account for deferred tax is accounted for on all of your year-end temporary differences between the carrying value of your assets, liabilities, and their corresponding tax base. And when the carrying value of the asset exceeds that of the tax base, there's been a gain, and gains are taxable. You're deferring the payment of tax, and you're creating a deferred tax liability. That's it's really three: gains, create taxable temporary differences, create deferred tax liabilities. Yeah, 2, 4, 6, 8, even. They go together. Accounting gains, create taxable temporary differences, create deferred tax liabilities. Gains, taxable, liabilities. 2, 4, 6, 8. Gains, taxable, liabilities. Examples. Other examples include revaluation gains, where your capital allowances exceed depreciation, because this leads to the carrying value of your assets exceeding the tax base. Whenever that happens, you're in deferred tax liability territory. There's a yin and there's a yang. So if you have a gain that is taxable, it's a deferred tax liability. But if you have an accounting loss that the tax relief will be in the future, then it's a deductible temporary difference and you get a deferred tax asset. 1, 3, 5, 7. Odd numbers go together. 1, 3, 5, 7. Losses, deductible assets. Accounting losses, which are ignored for taxation purposes, create deductible temporary differences. that give rise to deferred tax assets. Accounting losses, deductible assets. So impairment losses fall into that category. Accruals for expenses which are disallowed fall into that category. So when the carrying value of our asset goes below the tax base, or you're recognizing a liability which is ignored, these are all examples of deferred tax assets, give rise to deferred tax assets. Yin and yang. Yin and yang. I hope you don't mind me appropriating your culture. Yeah, I'm just going to admire that slide for a minute because it sums up ISA 12. It sums up how we account for deferred tax beautifully, beautifully. Yong Yap, basically, yes, when you're creating a deferred tax liability from scratch, you're crediting a liability, and therefore you've got a debit. And the debit is the tax expense, and the tax expense should be matched with and charged against where the profit has been reported. Now, normally profit is reported in the P&L. So by creating or increasing a deferred tax liability, you're crediting the tax liability and debiting the P&L taxation charge. It's a slight trick to suggest that the gain is in equity and therefore the tax should be in equity. You are correct in your question. Thank you, Kang Yong Yap. I would like to know the answer to two questions. Question number one is, what is our year-end deferred tax position? And question number two is, what are we taking to the P&L? In the beginning, the net book value of the plant was 500 and the tax base was 400. At the end, depreciation of 50 had been charged during the year and tax allowances of 80 had been claimed. This is going to take you 2 minutes. You might need a pen and paper. I've got a pen. I've got a bit of paper. I'm going to work it out for myself. Please, can you work out for me, please, the numbers here? The numbers here. What am I looking for? I'm looking for, I'm looking for, the first question is, what is our year-end liability for deferred tax? And the second question is, what's the situation in the P&L? 2 minutes, please. Yeah, think about it. When you think you've calculated a number, there's two numbers that you want, and I want to have both of those numbers, please, slotted around. I'm working it out for myself. I know I wrote the question, but I still need to work it out for myself. Thank you, Chris. I like it. Yeah, it's not a poll question. I'm just looking at questions, at students answering in the chat. That's fine. Deferred tax of 26. Well done, Chris. Deferred tax, temporary difference of 130. Lav. Yeah, love it. Yeah, love it. Love it where you're coming from. Chris has even got a tax of 6 hearing in the P&L. Yeah, love it. Yeah, so some of you are there. Some of you can get 26. I love it if you can get 26. I'd love it if you can get 26. 26 is the right answer. And I can show you how that 26 comes about in a moment, but it's so much better if you can come up with a 26. Right, here we go. Here we go. Right. In the beginning, the net book value of the plant is 500. I don't want that. I want to know the year end. And I think at the year end, the net book value of the plant is 450. So the carrying value at the year end of the plant is 450. That's the starting point. Deferred tax is provided for on temporary differences between the carrying value and the tax base. So the carrying value at the year end is 450. The tax base at the year end is 320, because the tax base at the year end of 320 is the opening tax base of 400 less the tax allowances, the capital allowances of 80. So therefore, you've got a carrying value of 450, you've got a tax base of 320, you therefore have got a taxable temporary difference of 130. If you've got a taxable temporary difference of 130, the taxable temporary difference of 130, that's effectively, yeah? Is this helping? Is this helping? $26. Pat yourselves on the back if you got up with 26. So what you've got is a year-end deferred tax liability of 26. Now, in the beginning, the deferred tax liability arguably was only 20, because in the beginning, the net book value was 500. In the beginning, the tax base was 400. So in the beginning, you had a deferred tax liability of 20. And what you're trying to do is you're trying to get to the P&L figure. And so you're increasing the liability by 6, therefore you're charging 6. So the two answers are deferred tax liability is 26, but because we'd already provided for a deferred tax of 20, the charge would be 6. I'm pausing for a second. Technically, that's the logic and the right way to answer the question. It would be a bit naughty to say 80 minus 50 is 30, 20% of 30 is 6. But that's the matching argument. But we should go through the balance sheet perspective, because ISA 12 is very keen that we go through the balance sheet perspective. 1 down, 2 to go. 1 down, 2 to go. Deferred tax needn't be examined in isolation. Deferred tax could be examined in conjunction with other accounting standards. At the reporting date, the asset is damaged. Prior to accounting for the damage, the carrying value was 100, the tax base was 100. Now we could sell the asset for 60, or we could keep the asset and get 70. Tax rate's 20%. So there are two things happening here. There's an impairment loss and there's a deferred tax asset. So I want you to tell me the two numbers. I want you to tell me the two numbers. I want you to tell me the amount of the impairment loss, and I would like to know the deferred tax asset. So there are two numbers, and I want you to work out for me, please. 2 minutes. We've got some very fast figures. We've got some very good keyboard warriors. And we've got the making of a teacher in Kang Hong Yap, because not only have they provided the correct answer, but there's a little bit there of justification. Just another minute, please. So an asset is impaired when the carrying value exceeds the recoverable amount. An asset is impaired when the carrying value exceeds the recoverable amount. And the recoverable amount is the higher of the fair value less cost to sell and the value in use. So the recoverable amount in this situation will be 70. I feel very, very, very comfortable with saying the higher. Yeah. So if we were discussing this in an exam, one of the things that we might have to talk about, because it wouldn't just be a number crunching, one of the things that we might have to talk about is the fact that the damage triggers an impairment review. So we're identifying there's an impairment loss, that the impairment loss is 30. Now that loss is charged against profit, but you don't get tax relief on it. It's a non-cash expense. The taxman doesn't trust us. And so they're going to give us tax relief at a later date. So we're writing the carrying value of the asset down, but the tax base of the asset remains the same. So the carrying value of the asset is coming down. So it's a loss. So it's deductible. Yeah, it's a loss. So it's deductible. So it's a deferred tax asset. And what we're looking at, yeah, is a deductible temporary difference because of the loss. Yeah, and therefore the answer 6. So the two key numbers that we were looking for were 6 and 30. 30 being the impairment loss and 6 being the deferred tax asset, which you then take to the P&L. So again, if you were being very, very aggressive, you could say, 20% of 30, but strictly speaking, we should go through the balance sheet perspective. I'm just pausing for a moment. Yeah, deferred tax assets do have to be recoverable. So there is a little sensibility test, recoverability test, that there should be future profits that you anticipate making. Two down, 1 to go. 2 down, 1 to go. And this is now getting a bit murky. I'm getting you to think. I'm getting you to think. Just a moment, please. Yeah, have a think, because there's more than one interaction. There's more than one accounting standard going on here. So think how you would plan your answers in this particular regard. So just another minute, please. So, you know, if you're obsessed with numbers of accounting standards, the issue that we're talking about here is ISA 37 provisions. And it's a month before the year end, got a detailed reorganization that's been agreed. It's going to be enacted next year. And the directors haven't decided whether they're going to announce it in a few days' time or after the year end. Now, the first thing to say is that if they announce it after the year end, it's a non-adjusting event. If they announce it after the year end, the conditions for recognizing the provision don't exist. Because if you're going to recognize a provision, all 3 conditions have to be met at the year end. There has to be a present obligation, legal or constructive. Now, you'll only get a constructive obligation at the year end if at the year end you've already made the announcement, and that announcement has raised a valid expectation and hence created a constructive obligation. So it's perfectly possible to say, if the announcement is made after the year end, it's a non-adjusting event, no provision is recognized, there's no deferred tax complications. Boom. That's the first part of your answer. The second part of your answer is, well, if they announce it before the year end, Then the announcement is the obligating event. The announcement creates the constructive obligation. The announcement means that we're going to have a liability, and we recognize that liability by debiting the P&L, crediting the provision. Bang. Then we would have to say, well, hang on a minute, that loss is disallowed for taxation purposes. So the tax base on that liability is 0. So we're looking at a loss. Yeah, we're looking at a loss. We're looking at a deductible temporary difference and therefore a deferred tax asset. And then we've got to think about what tax rate we would use. And it would be the future tax rate. But the government have announced, but it's got to be substantially enacted. So then you've got a judgment to make as to whether 25% or 30% is the relevant thing. So it's a rolling answer that needs to be built. Something like this could easily be worth 3, 4, 5 marks. And it's a little bit of post-balance sheet event. It's a little bit of provision. It's a little bit of deferred tax. It's a little bit of, you know, maybe there's 1 mark for the number. Do you know what I mean? It's like, it's not that great, is it? It's not a number crunch. You wouldn't open up a spreadsheet to work out that the deferred tax asset was 60,000 or the deferred tax asset was 50,000. I mean, you know, you just wouldn't, would you? You know, you wouldn't even use a calculator, I hope. The accounting issue is whether or not we're making a provision. You can only make a provision if all 3 conditions are met. If the announcement is made straight away before the year end, the announcement is the obligating event. The announcement is the trigger for recognizing the provision. Then the deferred tax on that is that you've got a liability that has a carrying value, but a tax base which is nil. So there's a temporary difference between the carrying value, which is negative 200, and the tax base, which is nil. The reason it's a nil tax base is because the liability has been ignored. The liability is ignored for taxation purposes because the question specifically, it said, these costs will only be deducted for tax on a cash paid basis. They haven't been paid. Therefore, there's no tax deductible. Therefore, the tax base is nil. We're dealing here with an expense. We're dealing here with a loss. So we're dealing with a deferred tax asset. And the philosophical question as to which rate to use, the rate we should be using should be the future rate. The best estimate of the future rate is the current rate. You would only deal with a future rate if it had been substantially enacted. And it's not saying that I don't trust the government, but an announcement seems to me to fall short of the certainty that the accounting standard seems to want with the word substantially enacted. So the argument would be that you would have a deferred tax asset of 60, and that effectively you're taking a loss, an expense of 200 to the P&L, part of admin or whatever, but you'd have a credit of 60 in the taxation charge. So you would be matching, you would be pairing, you would be offsetting the two. Can you see how this answer, that you don't use dashes, you develop those little points into little sentences, and that's easily worth 4 or 5 marks. I am pausing for a moment to see whether there are any questions or clarifications that anybody wants in respect of this example. Okay, good, fine. I move on. Yeah, we move. Yes, you could argue that. Yes, you could argue that. It's debatable, isn't it? You could argue. That's fine. It depends on how much you trust your government. If the government is making an announcement, have they got a majority in Parliament? Do they have a track record of always following through on their announcements? Maybe I'm cynical. Maybe I'm Western. Maybe I'm reading too much into it. But the language of the standard is substantially enacted, which means for me that it's not only been talked about, but a bill has been drafted. Maybe it's gone through the first stage. The government have a clear majority. There's a commitment going through. It's not just a bit of puff. So yeah, that's the argument. You can make that. You can make the argument for the 2-month announcement, but if you stop and say, but the announcement will be made after the year end, you then don't have the deferred tax twist to it. So clearly run with the twist, if that makes sense. We have looked at deferred tax. And we've looked at deferred tax as to why we account for deferred tax. Matching. Matching. The tax consequences of events, of gains and losses, must be reported in the same accounting period. So we're matching the tax and the profit. Yeah, that's why we account for deferred tax. It makes sure the accounts are useful. So we faithfully represent the post-tax gain, and we include completeness, we include the deferred tax liability. And by including that liability, we're predicting a future cash outflow. If you know your framework, you'll know how closely that's tied. My explanation is tied into the framework. So that is why we account for deferred tax: matching, completeness, relevance, useful information. How do we account for deferred tax? Accounting gains give you taxable temporary differences, give you deferred tax liabilities. So we take a balance sheet approach. But if you have an accounting loss, that creates a deductible temporary difference, that creates a deferred tax asset. And then we looked at 3 examples. If you've enjoyed this session, if you felt you've benefited from this session, there will be an opportunity for feedback. And thank the ACCA for providing these sessions for you for free. Because only by students taking up and attending these sessions and saying that they appreciate them will the ACCA in future continue to operate them. If nobody turns up, or people turn up and they say, look, it's not worthwhile, it's not particularly useful, then ACCA will say, okay, well, we'll put our time and effort and resources to supporting you in another way. So if you found these useful, let the ACCA know when it comes to the feedback, all right? Because there will be an opportunity for feedback. These sessions will be recorded and you will be sent a link to a copy of that recording. Okay, I think what I would like to do is to just take a check on the time. I do want to allow a good, 20 minutes, half an hour for questions and answers, for general chat about anything to do with SBR, etc. But I do think there is also an opportunity here for me to dive back into the practice platform. And actually that last question we were looking at, there's still a little bit of unknown. So I'm going to go back into that question, back into test reach, back into the practice platform, and to work another part of the question. So what I'm going to do is I'm going to close off that. There was this requirement in respect of Class A and Class B shares. And what I'm going to do is to pause for 2 or 3 minutes because I just want to give you an opportunity, if you like, of getting slightly ahead of me, because we are going to be doing this for 5 marks. And if we're doing this for 5 marks, that's kind of 8 minutes of your life, 8 minutes of my life to do it. And that's the scenario. All right. So yeah, I'm going to give you a couple of minutes where I'm not going to talk. And I'm going to give you an opportunity to read the question and to think about how you would plan the question, how you would plan the answer, and what you think the answer should be. So a couple of minutes, please. Read the question, get familiar with it. Yeah. If it is worth 5 marks, if we're looking at a question here, yeah, this question here, which is on financial instruments, which, let's face it, is one of the most popular and examinable areas of the syllabus, then hang on a minute, I'm just manipulating my own screen for a second, bear with me. It's not very good at doing 2 things at once. God. 1, 2, 3. So if what we're saying is that this is a 5-mark question, discuss whether the Class A and Class B shares should be classified as either equity or liability, 5 marks. How many minutes have I got to answer this question? How many minutes have I got to answer this question? What's 5 marks in exam time? Yeah, I'll take that. I'll take 9 minutes. I tend to operate on 8 minutes, but yeah, 8 or 9 minutes. So I'm very happy that you're aware of the rule of sort of 1.8. Yeah, it's the 3-hour exam, 3-hour, 15-minute exam. And the requirement of the question is to discuss whether the Class A and Class B shares should be classified as debt or equity in accordance with ISA 2. What's the most important word in that requirement? What's the single most important word for you to appreciate is in that requirement? Thank you, Hannah. Thank you, Hannah. I'm going to jump on you and I'm going to say thank you, because the word "and", because what that means is in our answer, we should be thinking about the classification of Class A, and we should be thinking about the classification of Class B. That's what we should be thinking about. Now it's 9:55. If I do this for 9 minutes, we're coming up to 5 past the hour, something like that. Yeah, so we're looking here roughly at 5 past the hour. Bismuth has 2 classes of shares, A and B. Cryptocurrency, oh my God. Both shares permit the holder to vote, given entitlement to rewards. Rewards are discretionary, so there's discretion over rewards. So you've got shares and you've got discretion over rewards on those shares. That to me sounds like dividends. Rewards sounds like dividends, variable dividends. I hate Bitcoin. Well, I don't hate Bitcoin. I've done a fantastic podcast on Bitcoin, but I know it's a tricky area sometimes. Bitcoin can be readily convertible into cash. So we've got a very clear statement there that it's convertible into cash. Class A shares can be redeemed at par. All right, okay. Where do I start? Where do I start? Low hanging fruit. Where do I start? Thank you. Explain the financial instrument requirement. Exactly. So I think we should start with a definition. Yeah. Financial instruments, when issued to raise finance, need to be classified as either debt or equity. Yeah, need to be classified as either debt or equity in accordance with substance. Debt has an obligation to redeem. Equity is evidence of ownership interest. Okay, 1 mark. Right, let's look at Class A first. Let's look at Class A first. Class A shares are redeemable at par. That implies they're debt to me. In the event they attain a listing on a stock exchange, but that listing is highly probable. That listing is highly probable. All right. So Class A shares, yeah. These would appear to be debt as the shares will, as bismuth, will be obliged to redeem the shares when the listing takes place. It is highly probable that the listing will take place. Now, I kind of jumped to that a little bit. There are other things that I could talk about. There are rewards. Yeah, both types of shares permit the holder given entitlement to rewards. You know, the rewards are in effect variable dividends, and these imply that we're looking at equity. But I think on balance, the redeemable element is stronger. But nevertheless, yeah, these would appear to be debt. Now, you've also got this awkward, nasty business that when we pay the money back, we could either pay back cash or we could pay back shares. Okay, Bitcoins. You've got the nasty business of Bitcoins, but Bitcoins are readily convertible into cash. Do we get involved in this? Is this a bit over the top? It's certainly making it very awkward, isn't it? So, you know, Bitcoins are deemed to be cash in this case. Bitcoins are deemed to be cash in this case. So it's clear to me that you would redeem based on you'd redeem in shares. You know, it makes sense that the shares will be redeemed in cash, will be redeemed by Bitcoin, which in substance will be redeemed by Bitcoin, will be redeemed by cash to the value of 1 Bitcoin. Yeah. Now, the trouble that I now have is I've only got 3 minutes left. and I've got to come up with class B. So I'm assuming class B, having come up with the conclusion that class A is debt. Yeah, I've come to the conclusion that class A is debt because they're obliged to redeem it. I'm going to assume that class B is equity. Well, why am I going to make that assumption? Bismarck is not compelled to redeem class B shares. Yeah, here I'm going to be really cheeky, and then I need to disguise what I'm doing because I've control copy paste. Bismarck is not obliged, yeah, to redeem the class B shares. So that's a bit cheeky, isn't it? Yeah, which implies these are equity shares, which implies these are equity shares. There is an option. There is an option to allow Bismarck to rebuy them, but we don't have to do that. If they do that, they have to pay additional rewards. Yeah. So whilst there is an option to redeem the Class B shares, there is no obligation to do so. Additional rewards are not the same as redemption. So, you know, I've got to say to myself, this is a 5-mark exercise. Am I getting 3 marks? Am I getting 4 marks? Am I getting 5 marks? And I think within the time allowed, I'm getting here at least 4 marks. I hope I'm getting 5 marks, because I would imagine I would give myself in the marking guide a mark 4, because time's up now. Time's up now. Yeah. I've got to the hour. I've got to 5 past the hour. I've had my 8 minutes. I've had my 9 minutes in the sunshine. I've got a definition. Yeah. And I think I would, well, I know I would earn a mark for that. The Bitcoin thing for me is a bit of a red herring, because it's not about Bitcoins. If you start defining Bitcoins and explaining about cryptocurrencies and intangible assets, you're being distracted and you're chasing off. It says that Bitcoin can be readily convertible into cash, which is really unusual. Really, I mean, in China, they're not allowed. It's illegal. But you've got a practical situation here. So Class A shares, it's a judgment, because on the one hand, there are dividends. On the other hand, they don't have to list, but it's said to be highly probable. Therefore, if it's highly probable, they want to do that as well, be in their advantage. It seems, therefore, highly probable that would be a trigger enough to recognize the substance and to show it, therefore, as debt. Good. Brilliant. Lovely. Yeah. Each question on the practice platform seems to break down into these different exhibits. So the requirement of the question, you know, in the beginning was the word. In the beginning, you need to have the confidence to realize that most of the questions pretty much are going to be in silos. Part A, impairment loss, exhibit 1. Part B, class A, class B, exhibit 2. C, ethical issues, blockchain, part 3. Ideally, in this question, I've broken one of my rules. What I tell my students is, if they do a question, they should do part A first, then part B, then part C, just in case of the cascading down, as there is sometimes. But it doesn't matter which order you do the questions in. So if you want to do question 2 first, do question 2 first. If you want to do question 4 first, do question 4 first. If you want to do question 1 first, you do question 1 first. You are adults. You work out your own exam strategy. Yeah, you work out your own exam strategy. Right. Well, I hope that was useful. That's me working through that particular question to show you what's what. In practicing it, and I really would encourage you to go on to the practice platform and to make it your home, to practice using the functionality, the control, copy, paste, the drop, are you going to use bold? Are you going to use the tables? Are you going to use the Excel spreadsheet? How does it work for you? Because you want to solve those problems and get used to those issues before the exam. You don't want to do it on exam day. You don't want to get involved on exam day in doing that. So, you know, you want to get on with it. You want to get on with it. Right. So I have a couple of questions that have come through that I would like to address, and there may well be more questions that are coming through now, but I do want to leave this last kind of 15 minutes, 20 minutes that we've got left at the end just to deal with your questions of whatever nature those questions are. And the first question that I've got that has come through is in relation to pensions. And the question is, what's the difference between a DB and a DC? Okay. DB, I presume, stands for defined benefit, and DC stands for defined contribution. So employee benefits, ISA 19, is a big standard. And at the gateway of it is this important distinction, and it's based on substance as to whether the employer is guaranteeing the future benefits. Now, if they have a legal system in place, then it's clearly a defined benefit scheme. But you can get situations where the employer always seems to honor pensions and creates a constructive obligation like you have in ISA 37. So it's sometimes it can be a judgmental issue between legal but in substance as to whether or not there is a obligation. So defined benefit schemes are much more complicated. Defined benefit schemes, the employer is guaranteeing the benefit based on years of service, based on salary during that. And so that's when you get the current service cost, the defined benefit schemes. Defined contribution schemes are a lot easier to account for because they represent what you pay in is the expense. From the employer's point of view, the cash contribution becomes the expense. So that's a relatively simple process. That's a relatively simple process. Good. Defined benefits. Does that help? Yeah. Okay. All right. I've got another question that's been sent to me privately by Win. Thank you, Win. What's coming up? What's coming up? I don't know. I don't know. Well, I do know. I haven't seen the paper. I haven't seen the exam. But question 1 will be on groups. Could be cash flow. Could be foreign currency. Could be goodwill. Could be impairment of goodwill. Question 1's on groups. Won't be accounts prep. There'll be a couple of numbers, but it's primarily describing and writing and explaining. Question 2's on ethics, but it's about the application again. 3 and 4 are on accounting standards. So the other thing that I'm really wary about in terms of tipping is some of you will do this exam in the morning, some of you will do it in the afternoon, some of you will do it in Hong Kong, some of you will do it in Singapore, some of you will do it in Karachi, some of you will do it in London, some of you will do it in Kingston, Jamaica. So ACCA actually have more than one exam. There's more than one December exam. So some of you will sit a different exam. So there's like maybe there's 3 exams, maybe there's 12 different questions, maybe there's 3 different versions of question 1, maybe. So some of you could do a cash flow, some of you could do a foreign currency, and some of you could do something else. So that's why I don't tip the exam. Current issues will be there. Now, if you want to know about current issues, my podcast. If you want to know about current issues, my podcast. If you want to know about current issues, so podcasts are very simple audio files that you can listen to. Just search my name, which is Clendon, podcast, and which is SBR. Yeah, that's what I podcast about. I broadcast free 10-minute little stories and sessions. Look, could you, if you've listened to any of my podcasts, can you put in the chat? Yeah, can you put in the chat that you've listened to them and you've liked them? Can you tell other people? Anyway, I've got another question here. Can we use both a spreadsheet and worksheet for the same question? Yes, you can. In the same answer, you can use both the Word and the spreadsheet functionality. Absolutely. What I would say is that you should do a bit of referencing. So in the Word section, you should get involved in just referencing C spreadsheet. But actually the marker is unable to write, the marker is unable to move on until they've opened up both functionalities. So yeah, brilliant. Right, I'll tell you what I'm going to do. I'm going to muck about here a little bit, and I'm going to go back to TestReach. But in going back to TestReach, I'm going to open up Google. And if I open up Google and I put into Google my name, Clendon, C-L-E-N-D-O-N, and then I put in podcast, and I wish I could, when you put in Google in podcast like that, you'll find a simple link. Oh dear, my internet seems to be a bit slow. And there you can see my podcast. There you can see my podcast. And it's on Apple Podcasts, it's on Spotify. Yeah, so we can go on to Spotify. Yeah, and you can see here that there are free audio files that you can listen to about foreign currency, sustainability, revisions, financial assets, cryptocurrencies, pensions. Yeah, there are episodes after episodes after episodes which are dealing with leases, COVID. All right, so please take advantage of this free resource. It'll help break up your study. It'll help break up your study. Yeah, so I didn't plan to do that, but I thought you could cope. I thought you could cope. All right, so that's how easy they are to be found. Do I think the issues relating to better communication might come up as well? Yes, I mean that's in a strange way, that's the whole paper. In a strange way, if we're reporting, we need to make sure that we're not boilerplating, that we're not giving irrelevant information. So yes, it's always important that we try and improve our communication. Lim, Audrey, instead of writing statement of profit and loss in full, can we write short form in the exam? Yes. Yes. Thank you, Audrey. You can get away with using abbreviations, particularly in the spreadsheet functionality. If you're using the spreadsheet functionality, it's just numbers, and you can put short little initials as to what you're doing there. Now, you saw in the written answer, I ended up referring to Ms. P and Mr. L, whatever he was, but I'd given the abbreviation first. I'd made it clear in the title. So if you want to use OCI, you should say other comprehensive income brackets OCI, and then thereafter you can use OCI. But if you're explaining to somebody about cash generating units, to use jargon, CGU, to use jargon is just frustrating. It's not good communication. So the short answer to that question is yes. Please use the, please, can we find the difference between cash flow hedge and fair value hedge in your podcast? Yes, you can. Yes, you can. It's in there somewhere about derivatives. Yeah, it's in there somewhere. So I have done one on derivatives. There we are. Accounting for derivatives. There we are. In this episode. In this episode, yeah, that's what happens. Bish, bash, bosh. So please, yeah, take advantage of this free resource. There I am in Malaysia. That's me in Malaysia. In Central Market. I know exactly where I am, or I was when that's taken. How do we differentiate between P&L and OCI? Good question. How do we differentiate between P&L and OCI, Arif? How do we? Rules-based. Yeah, rules-based. If you own a property and it goes up in value, where do you report the gain or loss? It depends. If you've bought that property for trading, if you've bought that property and it's inventory because you've bought it to trade, no gain or loss is reported at all because inventory is lower of cost and net realizable value. If you've bought that property and you are renting it out, if you've bought that property for investment potential, then it's ISA 40 investment property, gain goes to P&L. But if you've bought that property and it's your factory, it's your head office and you're using it, then it's PPE ISA 16 and the gain goes to equity. So there are three, you could own three identical properties next to each other, three buildings next to each other. You could own three of them. One's your head office, one's an investment property, and one you've bought in order to sell, in order to flip. And they could all go up in value. You could buy them all for the same amount. They could all go up in value in the next 3 months. And you would be accounting for the gains on those properties in three different ways because it depends on your business model as to how you're holding it. So there isn't a simple answer as to whether something is in P&L or OCI. The framework, the old framework was silent on the issue. The new framework gives us guidance about relevance and completeness and whatever, but it's very waffly. And all of the accounting standards take a piecemeal, individual approach to the issue. So PPE says equity, financial instruments is all over the place. You know, IFRS 9, you know, it can be in one or can be in the other. Derivatives can be in one, can be in the other. You know, debt instruments can be in one, can be in the other. Equity instruments equity instruments can be in one, can be in the other. I mean, it's you know, IFRS 9 is one of those standards where it's all over the place. It's rules-based. So in answer to your question, it's following the standard. It's rules-based. I'm just pausing, just looking at my various sources of where my questions are coming in from. And then I've got something here which I haven't quite read. If there's a revaluation gain in year one and the gain is recognized in equity, oh dear, that's all getting quite complicated, but I think I understand it. So this is about the precise details of ISA 16 in terms of where the gains and losses go. Now, if you want a childish headline message, reserves, right? Gains and losses go to reserves. Not strictly true. Gains go to reserves unless they're the reversal of a loss previously charged to P&L. Losses go to reserves unless you've exhausted the revaluation loss. Yeah, so headline message, everything in reserves. The truth is, though, in the P&L, you're taking gains if they're reverses if you've exhausted the reserve. So let me make up a very, very quick, simple example. We buy the asset for 10. We buy the asset for 10. We revalue it to 15. There's a gain of 5. Where does the gain of 5 go? Equity reserves. OCI has 5. Reserves now has 5. Year one, we got 5 in reserves. Next year, the fall in value is to 12. So it falls in value by 3. There's a loss of 3. Where does the loss go? Reserves. So the 5 now becomes 2. All right, got that? Yeah, so gains and losses basically go in the reserves. Now it falls in value to 9. So the 12 becomes 9. That's a further loss of 3. Now, last time we had 3, we took it to reserves, but that's because we had a reserve of 5. Now we've only got a reserve of 2, and we've got a loss of 3. So of the 3, 2 goes to reserves, 1 goes to P&L. So the asset which originally cost 10 is now written down to 9, and the loss of 1 is in the P&L. Yeah. So once you've exhausted the reserve, then the loss has to go to P&L. Now the asset is worth 20. So it goes from 9 to 20. That's a gain of 11. Now, normally gains go to reserves. But we've got a loss of 1 that's been in a previous P&L. So therefore, of the 11, 1 is a reversal of a previously recognized revaluation loss that has gone to the P&L. So 1 goes to the P&L, and then the further 10 goes to equity. Yeah, further 10 will go in OCI for that particular year. Brilliant. Fantastic. I've enjoyed it. Yes, doing past exam questions can help you get ready for the exam. Yes, 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 yes. Going on the, what are you going to be doing between now and the exam? You're going to be listening to my podcasts. Tick. You're going to be going on the ACCA practice platform. Tick. You're going to be doing past examination questions, mock questions. Tick. You're going to be building your confidence so that you spend the time in the exam efficiently, managing your time. There is a limit. However well prepared you are, you will never know everything. There's a limit as to how much knowledge you can cram in your head. What you've got to practice now in the last few days is getting that knowledge out, getting that knowledge down, applying the knowledge. The winner, the people who pass the exams, are not the ones who've absorbed the most information. They're the ones who can apply the information. And you're going to have unknown questions in the exam, tricks in the exam. But you keep going. You keep going. ACCA have provided you with these resources. They've provided you with the ACC, with the practice platform. Take advantage of these resources. Listen to the podcast. Make a difference. If you found this a useful session, yeah, please let me know on LinkedIn, please. Yeah, let ACCA know. But For me, for now, I've answered your questions. Been a good 4 hours. It's amazing how time flies. And I look forward to hearing that you've passed SBR. Yeah? Good luck. Thank you very much indeed. Yeah? Good luck. Thank you very much indeed. I'm so glad it helped you. Thank you. That's appreciated. Thank you. Thank you. Excellent. Yeah, good. I only wish I could be there. I only wish we could be going out for chicken wings. Yeah, some nasi goreng, nasi lemak. Such a shame. Maybe next time. All right. Yeah, Jelana Law. I love you. I miss you. Chili prawns. God bless. Thank you, Audrey. Thank you for your questions. Thank you for your contribution. Thank you, Canary. I will stay safe. Yeah. I want you to stay safe, please. Yeah. I want you to think positive and test negative. Yeah. That's nice, Melissa. Yeah. That's nice. That's a very nice thing. Yeah. Good luck, everybody. AJ, all the best. Yeah. Brilliant. Good. I'm glad you appreciated last time's webinar as well. Yeah. Good luck, Dylan. Good luck to you as well, mate. Good luck. All right.